Hello again, traders. Right, it is Saturday morning, Easter weekend, and my plans have been thrown into disarray because a couple of family members have got COVID. So I'm hoping that it will just be sort of cold symptoms. I haven't got it because I haven't seen them for a week or so. Well, about a week actually. So hopefully I'm clear and hopefully they will recover quickly. So plenty of time. This is an impromptu video based on the end of the week charts, and as you know, I love my dashboards, and you know, this is a sort of a fairly random selection of pairs, instruments, whatever you want to call them, a couple of cryptos, a bunch of random indices, and then currency pairs. You've got the dollar index there, cable, euro, I like to have a look at, and they are sort of bunched together in sort of what could be loosely described as an organised setup. So euro and Swissy, the US dollar Swiss, often work in the opposite direction. Cable and euro tend to work in a similar direction, so these three would be related. Then cable and or should I say pound and euro would sort of give an idea of what's going on there. So correlation is a thing. And then what else do I use these dashboards for? Well, I look for big candles. A great big candle there, if this was the recent week's close, would suggest a pullback, which we had there. Same here, big old red candle there would suggest a pullback. And all I do then is switch to any charts that look interesting. I switch to sort of refined mode, if you like, and study the chart in detail. So a bunch of green candles all running up there. This is a monster trend on a weekly chart: low, high, high, low, high, 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 low, high, high, and so on and so forth. Inside bar, continuation. So this one has had a rest, if you like, so I'd prefer not to see the inside bar there. And all sorts of things like that. So the inside bar is a week of consolidation, and then as you can see, it's continued up. So we can learn so much. This is different. See, that's different to that one because they are continuous uptrend. So there's these subtle differences between these things. Long wicks always interest me. Inside bars we talked about interest me. And then what is glaringly obvious from this chart, and which prompted me to make a quick video, was these reversals. That is a classic three candle reversal there. And remember, we're not talking about three candles, 1, 2, 3. We're talking about the candles, the penultimate high, the ultimate high, and then the candle that closes below the penultimate candle's low. That's a classic wick level three candle reversal. This is the subtle difference here next to it, so another good reason to make this video. This is a three candle reversal below the open and closes of the bar. So there's the close, there's the open, and as you can see, this has continued on down and finally closed between that level there, which is what I call my line chart 3CRs. Yeah, that one's a classic 3CR there. That's a classic 3CR there. This one is a classic. And what else can I, and that one I'm not sure. That might be a line chart there. It might not have closed below that low, but we can't get the levels off this. But you can see what I mean. If this doesn't close below the wick, but it's closed below the flip, what I call the flip zone, or the battleground, if you like, the close and the open, then that is a line chart 3CR, not the classic 3CR. What have we got going on here? Yeah, that would have been a line chart 3CR. Oh no, it looks like it closed below the penultimate low there actually. Apologies, I was wrong there. That is a line chart 3CR because it's hasn't closed below the wick although that does look like that might be slightly higher. So sorry, you get my point anyway from all these different examples we've got. Anyway, another really interesting aspect of this particular video is these are shallow. These are shallow because if we consider that to be the 3CR candle, our stop needs to be above the high of this closed candle. So you can see your stop is relatively, if you entered, say, you know, as a result of what goes on here, then your stop is just above there. That is a small stop. This one is not a shallow 3CR, or should we use this one perhaps? But let's say this is a classic 3CR below the wick there, a close below the wick. Then that's not shallow, because these candles are bigger. That's the only difference. Smaller candle, bigger candle. Smaller angle, if you like, massive angle, you know. So this is where the TMA slope comes in useful, actually, because you know, the slope is all about the angle. That's the slope is the angle of the downtrend that you're considering entering in. And remember, that's sort of your target area if you could consider this as a 2B reversal, and this is your target area in the same instance. So massive target, shallow reversal, massive target, shallow reversal, not such a big target, deep reversal. So that's the difference. So tons and tons of really interesting looking charts here. Really interesting. I mean, forget the fact that we've got inverse hammers or shooting stars or whatever you want to call that, massive wicks, all of this wickage going on here as well, wickage here, you know, massive indecision, uncertainty, always a good thing to look for as well. These are all classic charting examples from Japanese candlestick books and whatnot, you know, reversal to the long side. Now, the other thing I should mention, and I nearly forgot, is that if we have a 3CR, we often get a pullback. So we've broken that resistance level on this Swissy here with your 3-candle reversal, classic 3-candle reversal. Let's remind you what these are. This is your penultimate high, this is your ultimate high, and or low, should I say, penultimate low, ultimate low, and this is your reversal. This one's a little bit tricky because, you know, you've got that high that's higher than that one, and is that a resistance? Well, that resistance not been tested, but this resistance and this resistance have been broken. So if you drew a line across here, this is what I would expect this to potentially come back and test, and maybe even further into this sort of flip area here where this candle closed. This one actually gapped down and then pushed up. So again, loads of information just from a handful of candles, and don't just expect this to reverse. The power might be that it just wants to continue, but we use the lower time frames just to tackle that reversal. And when I mean lower time frames, I'm talking about M1. I'd be watching this if I was awake at the open of the new market, and if it gapped up, I'd expect the gap to close. If it gapped down, I would expect it potentially to have done its stuff, and we've missed out on that potential trade, and it will likely continue to fill the gap and do what it does. But again, all we have to do is use the lower time frames. No guessing involved whatsoever. We use the 3CRs on the M1, M5, M15. We use the RSI histo on those to basically just follow the rules. All the rules still apply. I mean, these 3CRs are everywhere. 3CR down. This one did pop back, and it's continuing down now. So that wick may get filled. This one looks a bit iffy to the long side, although that was the trade last week. Now we've had the inside bar created, so potential maybe strong dollar, continuation up, much the same as that inside bar and the continuation. So strong uptrend, pullback, who knows what will happen, but we follow the lower time frames. So masses of information here, and I was going to have a look at one of these three shallow 3CRs here, see what's looking interesting. US 500, I don't often look at that, so I'm not going to bother. That's a 3CR, shallow 3CR. That is beautiful 3CR, but I just don't trade that, so I'm going to have a look at the US Tech one anyway. So I was having a quick look at this. Well, let's have a look. What did I see on US 30 weekly? And this is the beauty of these things, the clarity I personally get from, it wasn't that one, delete, the clarity I get from these weekly charts is just phenomenal in my opinion. So let's have a look at, I wonder if that's the US Tech Weekly I was looking at. Yeah, that's it. That's a better one. So on this chart we've got the 3 candle reversal. This is Aaron's fantastic indicator, Intrepid Noodle on Twitter. And the reason that's not a thick bar like that is because it hasn't actually officially flipped over to the new week, but on Monday or Tuesday maybe, because we're on a bank holiday, this will close with a line like that, and then I would expect this to potentially pull back, because as I explained on the dashboard just now, a break of a level of support, and support, remember, is the part of the uptrend. That's true support because it creates a high, true support because it's a green candle at this point here. So excuse me, I'd be looking for a pullback, 3 candle reversal, pullback potential, and then continuation down. I mean, that is just such a bearish chart. We're below old resistance. This resistance made the new high here, broke. Once it's broken that high, that is considered support, which has become new resistance. Apologies, I didn't explain that properly. Old support acting as new resistance here. It's been tested, and you will see these spikes here probably also correspond with 3CRs on the left hand side, pretty close. I love to use the 3CRs as targets and so on and so forth. Talked about that in many of the videos. Remember, I've got about 925, 26 videos now, of which probably only probably 890, sorry, the other way around, 30 or so are public. The reason I made the private is because of trolls and lack of interaction. So they are being made public again, gradually, one by one or a couple at a time. But that's down to your interaction. If you follow me, please retweet various links to new videos as they become public again. And if you do retweet me and I don't follow you, I will follow you because of the interaction, as a thank you, as it were. And what the heck are you doing if you're not retweeting stuff? Worthless, really, you know, if you're not helping other traders, in my opinion. So get hitting that retweet button and spread the word, as it were. So yeah, so we're 9 o'clock alarm. We are at a critical point here. We've trended down below old buyers, and there's no interest whatsoever. So all of these indices are looking pretty much the same. But you know, the information, that's the point of this video, the information you get from these weekly dashboards at the weekend and the weekly charts is just phenomenal. If you're on these lower time frames, I mean, you know, what really is that telling me? Elliott wave, 5 waves, all ABC, all this, that and the other. What a load of old baloney, really. I mean, everything, there is no holy grail of trading. It is just a question of, in my opinion, the best way to trade is studying candles, you know. It wasn't very much, well, it was almost never heard of when I started out. I devised the 3CR. Even the 2B reversal I talk about all the time is a swing 2B reversal there, 2B reversal here to the downside, 2B reversal here to the upside. They are swings. Candlesticks are the way forward, in my opinion. You know that. Lots of people do the strat, and I think a few others mess around with candlesticks now. But as you can see, This is a complete mess, but when you look at the weekly candlesticks, it all becomes a huge amount clearer. So yeah, this is what I reckon we should be looking at: a 3CR down, possible pullback, then a continuation, and who knows what will happen. And going on a couple of charts I made last night. Easy way to see where these really critical levels are is just to draw lines on the line chart. Line charts are the closes of candles. There's a really strong level there because it's broken that high, that's support, and as you can see, it's acted or reacted. Price has reacted to that level there. Then we've got to get through that sort of confluence level there, resistance and support, and then we've got to get through that level there. And to the upside, we can see we've tested that level there, we've tested that support there. 3CRs are an easy way. Aaron's fantastic indicator again. 3CRs are an easy way also to identify fairly critical levels and what I call congestion levels. Well, everyone calls them congestion levels, but battlegrounds, if you like, I call them. There we are. So thanks for watching. Have a great day. I hope this has made a couple of light bulbs ping, as it were. Oh, the other thing to mention about these critical levels is if price is going to go back up again, it's got to get above this and use it as support, resistance, which created this new low, as support. Well, I should change the colour of these, but we can clearly see neither of these levels, here or here, have acted as support. Here it's just popped up, tested them. In other words, it's looked for buyers. Buyers have not come back into the market, and then it's just crashed through them. Massively bearish indicators, if you like, of what price is going to do. And if it was going to go further up, it would have to get above there, and if it was going to go further up, it would have to get above there and use it as support. So you can use these as ladders, if you like, steps. It's created these steps down, so it's got to climb these steps up, and that's as simple as that. So it might pop through it, but if it doesn't use it as buyers aren't found when it's tested it and then come back to test it to consider going long, then we know that the bias is still short. A lot of people seem to forget this when they're talking about cryptos. They just say, oh, it goes down to that level, so that's it, boys, we're off. And it's an absolute load of rubbish. So thanks for watching. Have a great weekend.